Hello and welcome to ETBFSI.com. My name is Amol Dethe and I'm in conversation with Varun Dua from the Acko General Insurance. Varun, glad to have you.
Thank you. Thank you so much for having me over.
So Varun, you are one of those companies which is actually focusing a lot specifically on a digital side. We have traditional companies which are focusing on digital, but they started with a traditional. You started with the whole agenda for digital insurance, and now there are a lot of companies are also getting into this, segment. Number of insurtech companies have also, growing significantly in the insurance business. I would like to learn from you since you are there since now, I think 3 to 4 years in this business. What kind of trends are you witnessing in insurance segment right now? What kind of changes are happening specifically in the insurance sector right now? If you could tell us, it would be really great for us to begin with.
Yeah, it's an interesting question. Everybody is wanting to. It doesn't matter whether it's insurance or something else. Everybody is wanting to be digital or go online for products and services, and insurance is no different. I think Acko's thesis on wanting to be a digital insurance company came from two, three very core things. It's not just because digital is the wave or everything needs to be digital at this point in time. I think when you say digital insurance, it fundamentally means, at least in our understanding, that you are able to create products, sell them directly to customers without any intermediary or without or much lesser distribution cost. And final products are landing much cheaper to the end consumer. And when they land much cheaper to the end consumer, of course, there's growth. Second is our job is also to underwrite better. So you have access to more data because customers directly talk to you. And when they talk to you, the way they behave on the website and so on and so forth gives you a lot of insights into fraudulent claims and so on and so forth. So digital is just not a not just selling online, but I think the entire thing about product, what kind of product, what price, what underwriting claims, everything changes if you have technology at your core. So yes, we will continue to see more and more adoption on the digital side and more companies coming in this space. The second thing that I'd like to say is that it's very important. We believe, at least in insurance, to be able to control the value chain. When I say control the value chain, I mean product pricing, distribution, claims makes the value chain. So at least Acko has taken the view that we need to be a manufacturer of insurance, which is we need to be the balance sheet. We need to create our own products. So while we are seeing a lot of companies come in the insurtech space or digital space, I would say that Acko remains one of the few who has gone the full stack approach or the approach of actually creating their own products. Distributing different party products, again, you either don't control product, you don't control price, you don't control claims. So it's very difficult to actually land the value to consumers. So while more and more companies will come in the space, I think true value creation will happen with companies, in my opinion, with who are solving the whole thing, not just distributing products.
Right. Valid points, Varun. Uh, but let me come back. Let me come to you specifically on the distribution parts. I do understand that the digital made companies or digital only companies or insurtech have made distribution very seamless. But considering the opportunities which this sector has right now in terms of distribution, how do you see the business shaping up? Because ultimately, what is happening, is the insurance penetration is very less. The large companies which were there still in last 2 decades were getting to the same pie and competing in the same pie. So my question to you, Varun, is by innovating a distribution model, did you manage to reach out to a new pie? Did you manage to, what you can say, sell more insurance policies to the areas which were never part of the insurance business?
I would say both yes and no to that answer. Partly yes, because today Acko has a customer in about 600 cities, and there are and some of these cities, unfortunately, I should know more about the country, are names that I have not heard of. And we definitely know that the traditional insurers have not set up branches or distribution in those cities. These are not the top 20, 30, 40 towns or cities in the country. So the ability of a digital model to penetrate every nook and corner of the country, especially with the advent over the last few years with geo and mobile phones and so on and so forth that's happened, I think we have managed to actually sell right up from Jammu Kashmir to the northeast to down south. Every state, every small town, somewhere or the other, Acko has a customer. So therefore, it definitely digital really ensure that those barriers get broken about wanting to set up people, branch infrastructure to be able to access customers and access a market. However, there is another the second part to this, the no part to this is that we have a certain skill set. Acko has some strengths in terms of technology, understanding of insurance, so we use it for a certain segment of the market. There is a big segment of the market which is not online, or a big segment of the market, or a reasonable size segment of the market that still probably needs a lot more education before they can come online. I think private insurers, whether digital or traditional, be difficult to solve. That's why in India that we do still have government insurance companies, that are the new Indias and the Orientals, which are catering to a lot of that population. It's very difficult for private enterprise to actually penetrate. Probably the best chance with is online, to do it as the company, as the country gets more and more digitally savvy. But yes, there is a segment that there is a room for government companies, traditional companies to continue to play a role in expanding the market where education and awareness is still a challenge. I don't think Acko yet has reached that stage that it's creating so much penetration, but definitely we have customers in far more cities and towns and villages than even quite a few of our counterparts, which might be decades old.
Right. So, according to my observation, obviously, the major changes which the digital insurance companies are making is one, they're manufacturing even customized products, small ticket products, which the traditional companies never did. And second is obviously making a distribution chain very seamless. So, do you by any chance, I mean, this is just a cross question to what we just said, do you by any chance want to stick to only digital distribution model going ahead? Or you also by any chance want to think about a phygital model where in certain areas you may have a distribution chain, which the traditional companies are still very bullish on?
Yeah, so I don't think we are wedded to digital as a distribution model. We are not saying that we are married and to it and we'll never do anything else. The definition of digital, phygital, all of it is a little gray nowadays. So I don't know whether when we partner with Amazon and we sell a mobile phone insurance, that's of course a digital way of selling. When a customer comes online and buys car insurance direct to consumer, that's online. We also even today work with brokers on the health insurance side, where we cover employers and their employees for their health insurance. There we do work with brokers. But the way the employee who's getting covered by the employer provided health insurance experiences the coverage is through the Acko app. While we deal with the HR of the company through a broker, and there's a little bit of physical sales like involved, at the end of the day, the experience to the end customer, which is the employee, is a digital experience. So when we say phygital and digital, I think basis the understanding of what that category is, whether auto, whether health, whether mobile phone, whether life insurance tomorrow, or any other product. I think we will take a call. We don't have any strict definitions. I think if it makes sense to do something a certain way, I think that's a really a thought process. Yes, but technology and the end product experience being on Acko is something that we would always strive for. If an agent sells my policy, the customer never comes to my website, doesn't talk to me, maybe Acko won't do it. But if there is a way in which we can partner and the customer directly talk to us, we have underwriting information on them, they directly have ownership with the brand, then yes, all models are open.
Okay, noted your point. So basically, you're looking at that engagement through Echo with all the policy holders. Valid points, Varun. I wanted to come back to come on the partnership which you only discussed. So the one great thing which I have seen with all these new companies, whether the insurtech or the even fintechs, they have been partnering with all these e-commerce players. So you mentioned about Amazon. So how these partnerships with maybe Amazon or Flipkart of the world is helping you in terms of reaching out to the people? Perhaps it would have been really difficult for you otherwise, to reach to them because those companies have their own chain of customers buying products, and you're simply, incorporating an insurance policy for them. So how is it actually helping you?
Yeah, you're right. Typically insurance is or financial services in general is not a very high frequency category, right? Like you will buy a health insurance policy once in your lifetime. At best, twice you will take that decision, right? About wanting to buy health insurance. Car insurance, you will buy once a year, at best. So when you look at horizontal companies like Amazon or Flipkart, or where the customer is actually there twice, thrice a month, or maybe more, or at least 3-4 times a year, it gives you an opportunity to engage with that customer. It gives you an opportunity to provide him trial products where he discovers the brand. So for example, somebody is buying a mobile phone on Amazon, and he can see that for a new mobile phone, he can buy mobile protection or insurance for his mobile from Acko. I think that's a great way to discover the brand. That's a great way to also try Acko as a new brand for a small ticket size product. When I'm making my health insurance decision, I want to trust the brand. But when I'm making a quick mobile insurance decision, which is worth a few hundred rupees, not a 15,000-20,000 rupees, I'm okay to try a new brand because it's giving me the convenience, it's giving me a digital experience. I don't have to do any paperwork. So in that world, the customers really discover the brand, they become a part of the family, and then they have far higher trust in graduating to more expensive products or bigger needs like cars or health and so on and so forth. So to answer your question, how has it helped? Of course, it has helped in one, creating new categories like nobody insured ride sharing rides. So of course, that's a revenue pool, or where we can do new business, or no insurance company was doing gadgets and appliances at scale before Acko. So these are new income streams or new product categories that we are creating. But yes, also customers are getting introduced to the brand, and millions of customers have bought these small ticket size products and become aware of the brand, and they continue to come and buy other products from us.
Okay, valid points, Varun. Since I think you're almost operating in this space since 5 years, right? I was going through your website and I understand there are 50 million customers that you served in all these years. So my straightforward question is, are you profitable right now? I'm sorry, I didn't know about it.
No, we are not profitable. I think typically insurance companies have a 7 to 8 year break-even cycle. And I think we are on track for that. It's the 5th year. It'll take us another maybe 2 odd years. Also, we're seeing a great amount of growth at this point in time. So we're growing by almost, so from last year to this year, we've grown at 150%. Next year, I think we will continue to grow above 100%. So right now, at least our view is that the model is working well. Customers are profitable, but we want to continue to invest in branding, continue to invest in technology. So it will take another 2-3 years. But yeah, we are at least now reached a stage where every policy that we write is largely profitable. But yes, we continue to make larger investments on the brand, larger investments on technology. That will take another 2-3 years to recoup.
Okay. Are there any, what you can say, the industry is focusing a lot more these days on the underwriting profits, right? Do you also think that underwriting profit is the only way for insurance companies going ahead, considering the uncertainty may happen at any point of time, unprecedented events may happen at any point of time, and suddenly you may have to, shell out a lot of claims and, burn a lot of cash?
So I think underwriting profit is very, very critical for insurance companies. In fact, in India, I think it's been far more undervalued as much as it should be. So one of the reasons in India, most companies have not made underwriting profits. Only few have, top 2-3 have, but the rest of them have not, is because everybody is relying on investment income or float income that insurance companies generate to cover the profits. So to put it simply, if I sell a policy for $100 and my operating cost plus claims cost is usually more than 100 rupees. But the reason why the insurance companies are still profitable is because they make investment income, which is they invest the premiums in debt markets and a couple of instruments that the regulator allows, and they make a lot of interest income. And with that interest income, they're able to cover up some of this and get profitable. But that in that world, what happens is you're very dependent on how the markets are playing. Not the product you're selling actually does not have margin. When you say an underwriting profit, your product should have margin. So as there is interest rates come down in India, which they are, the insurance companies will not be able to make too much interest income. And when they are not able to make too much interest income, there will be more focus on underwriting profit. And that's what we are seeing today, why underwriting profit is becoming more and more important, because interest income, which is the other revenue line, is you're not making that much on it. anymore. From an Acko perspective, I think we are still very young. Underwriting profit is something that's been critical to us from day one. And that's why we've chosen the model in a certain way. We don't want to depend on interest income being the only reason why we are, why we are making money, because that's not a controllable variable. To last point on that is, our business is to pay claims, and scenarios like COVID, scenarios like floods are where we will take losses. That's part of our business, but this doesn't happen every year. So we have good years also. So if you take it over a 3-4 year cycle, I think it's our job to, support the customers and support the nation in some sense when these situations happen. That's what insurance is there for. So I'm not too worried about some of these incidents, because they happen on and off. There are many good years also that happen. But so underwriting profit is something that you may not have 1 year or because of COVID or something, but largely I think most companies should be and will be striving for it.
I think one interesting fact I think you must have researched a lot before entering into this business is the whole general insurance company has two revenue engines. One is the health and second is the motor. And the rest, it depends on each company. And you have entered only in these two strong pillars, right? Health and motor is, I mean, obviously you have other products also, but I think health and motor is one area where your focus is very sharp. I can see that. Uh, how has been the segment in terms of revenue generation for you? Is health better than motor or is motor better than health for you?
So motor is a very old business for us. It started with, when the company started with motor. So motor is now 4.5, 5-year-old business. It's already at 1,000 crore plus scale that it's reaching. Health launched for us only about 15 months ago. So today health is only about 20-25% of the business. 50% plus of the business is still auto, because it's our oldest business. In the medium to long run, though, I see that health could become or will become bigger than auto. The health market, like you rightly said in the beginning, is very, very underpenetrated. Auto is not underpenetrated, right? Whoever has a car has insurance by and large. So there's no underpenetration there. But health insurance is huge amount of underpenetration. So in the next few years, at least half a decade, if I see a 3 to 5 year journey, I would guess that health insurance should become bigger than auto insurance for Acko, at least in the near future.
Okay. On health side, are you focusing more on the retail or the corporate?
We've been focusing for the first 15 months on the corporate side. We are due to launch our retail offering sometime end of this financial, maybe by February, March. And so going into the next financial, I think retail health will be a very, very big focus for us.
Okay. Noted your points. So again, we are in an interesting time, and most of the insurtech companies are coming into this place. In last 1.5 years, only a lot of companies came. Obviously, their focus model is the distribution. But what is happening is, a lot of traditional companies are also coming with digital. They're also doing a lot of partnerships with the new age insurtech companies. So, do you see a huge competition going ahead in an insurance business? I do understand the penetration is very less. Still there are a lot of people to cover, but that's also one of the challenge because most of the companies will only reach out to those areas where the perhaps insurance penetration is, and not the other areas, or not the other way around. So, how do you see the whole competition and the penetration game shaping up in maybe next 2 to?
Yeah. So I think at the end of the day, we are all, it's a for-profit business. We want to ensure that we have the best quality book, the best customers, high growth, profitability, all of these things like any other company. And the rules for insurance are not very different from rules in any other business, I feel, which is the entity or that controls the customer and has a direct relationship with the customer will control most of the value. So if customers trust your brand and want to buy from you, you have pricing power. You can price your products better. So I think building the brand, building the technology, owning the relationship of the customer, there are all equally critical, components to actually create that value. So when you talk about companies who were largely, let's say, physical or traditional and now partnering with new age firms and so on and so forth, I don't see, that strategy, to be honest, being very, very successful. Because you can't take one part of digital and say, I'll become successful. Like I said, all three are important. how you're building the brand. Are customers directly talking to you? Do you have the ability to underwrite them better? Do they reach out to you for a claim or directly go to the hospital or the workshop? Because if they go to the hospital or the workshop, you have no chance of intervening and reducing the claims. So if the customer does not have a direct relationship with the insurance company, partnering with lots of digital firms is again one more way of distribution. So earlier you had agents, now you have more technology driven companies doing the distribution. So while I see competition, I don't think that sitting in both worlds really helps. That I will cater to the physical world also, I will cater to commercial insurance also. For example, Acko does not do any commercial insurance. We don't do factories, we don't do marine, we don't do crop insurance. And that's a very conscious choice because we want to be a consumer tech brand. As much as an insurance brand, we also want to be a consumer tech company. Now, if you are an insurance company which is doing commercial, which is doing agents and doing a little bit of digital partnerships, I don't think you can be everything to everyone. So I think focus really matters. And we are very clear that we are a consumer tech customer owner relationship company. And some of these focus pieces, I think, really help you in the long run. I don't think you can be a very great technology company and also a very great government crop insurance company. I don't think these two companies are the same companies.
True. I agree with you. In fact, that's why they had quoted another company called Agriculture Insurance Company.
Yeah.
But again, the New India and the other insurance companies are selling more crop insurance than even that company.
Absolutely.
So, by your point, Varun, why don't you also tell me or explain me more about the claims? Because when you are saying that you want to do everything on your own, does that also mean that you do not have your TPAs or third parties to settle the claims and the customer directly calls you by any chance if he goes to a hospital for anything, whether the cashless or medical? How that process works? You can take maybe a minute or two and explain us.
We partner with TPAs. It's not like we don't partner with TPAs, but we also have it's a hybrid model. We also have direct relationships with hospitals where naturally most of our customers go. So you could be, let's say, for example, living in Bombay, and at your income level or your geography, maybe you live in Bandra or I don't know where, but then you're likely to go to the top 5, 10, 15 hospitals, right? So health, for example, your income levels of the customer and geography of the customer really decides the choice of healthcare. So whether you go to a Apollo or a Leelavati, or you go to Holy Family, or some lower mid-sized hospital, really depends on your income and your geography. So where we feel we have concentration of customers in which segments, there we have direct relationships with with hospitals. But we also understand the need of providing pan-India coverage. So for example, we could have a customer in Bombay who unfortunately meets with a road accident on the highway in Jaipur, for example, close to Jaipur. Now, can I have direct relationships with every hospital in Rajasthan? Maybe not. There we use TPS. So we have a hybrid structure where customers do call us even if they want to get their claim processed by a TPA. Some places we use a TPA partnership, and in some places we have direct relationships. But more and more we are focusing on where our customer segments are, and in those places at least we have are getting to more and more direct relationships.
Okay. Maybe one or two important questions on the eco front, specifically on the growth and the future roadmap, Varun. So you're already 5-year-old company, and obviously you will have your own targets of growth and the break even and the profitability. How do you see the future for you maybe in next 2 to 3 years? What kind of changes do you see? Will you be profitable perhaps in next 2 to 3 years, or is that on agenda, or you just want to break even and maybe just grow massively in next 2 to 3 years? What are these 2-3 factors that you are focusing on right now?
Yeah, so we look at almost each business differently because some business, and it's also a little to look at profitability needs to be looked at the maturity of the business. So for example, if you ask me the next 2-3 year question, will auto business, if I were an only auto company and let's say only a motor company and not doing anything else, auto as a business is 4 or 5 years old for us now. Will it be profitable in 2 years? The answer is yes. Health insurance is just a 15-18-month-old business. Will it be profitable in 2 years? I don't know. I think there's a lot of room to grow, lot of experiments to run, lot of new innovations to do, customer experiences to build, growth to be done. So I don't think we'd be very focused on health insurance, on more on growth and innovation. for the next 2 to 3 years because it's a very new business for us rather than profitability. Now, when you add A plus B, the company could become profitable or be slightly less profitable depending on what our ambition on health is. So I think companies get built out in phases. I would say our phase one would be profitable. It really depends on how health responds as a segment for us, and if we as a company decide to press on the pedal or go for more growth on health, maybe profitability will get stretched out. But yeah, our older businesses will be profitable.
Noted your point, but I also wanted to speak more on the IPO, fund expansion, and those sides. Why I'm telling you this is because there is this UK-based insurtech company called Lemonade, which made a big noise, all over the world. Not because the product which they were offering, the UI and UX, they were claiming that buy insurance policy in 30 seconds and we disburse the claims in 3 minutes, right? Which was very attractive. But why they became in headline is because they hit the Nasdaq. They listed on the New York Stock Exchange with $1 billion, right? And it was hardly like 4 5 years old insurtech company in the UK. I can see the same rally here, not specifically in insurtech. I mean, the Policy
Sure.
Bazaar did a fantastic job in IPO, but a lot of fintechs are doing the same thing. Startups are also heading towards that. By any chance, does that interest you? Do we see, Acko is also hitting the stock market or maybe raising far more funds and becoming a billions of dollars company, not just a unicorn?
So, from an IPO perspective, yes, it is something that we would like to do sooner than later. I don't have a very specific timeline. It's definitely not the next 1 or 2 years. Maybe sometime after 2 years is where we'll seriously consider it. But not in the next 12 to 18 months for sure. Maybe after that is something that we'll have to look whether we want to do it. There's a reason why we would also like to be a listed company. The reason for that is we are a financial services company. There are only 20-30 insurance companies in the general health insurance space. There are a few banks, and whether it's the customers or the investors or the regulators, all three of them have much higher confidence on regulated financial services companies and listed financial services companies. Listed companies carry far more governance, far more trust, both for customers, regulators, and investors. So one of the reasons that we would want to do that is to ensure that we are able to display higher levels of governance, to all the stakeholders, whether it's customers, investors, or the regulator. Having said that, I don't think we would like our business to be at least 3 to 4 times of our current size before we hit IPO, and that's what we will take 2 years to do. And that's the reason we believe that not in the next 12 to 18 months, but we can get to 3 to 4 times our size in the next 2 years. And that would be probably the right time. There'll be more maturity in the company to be a public company. We are seeing some of the IPOs while there's I'm not talking about the Lemonade IPO, but some of the Indian IPOs like Paytm and Policy Bazaar, while they IPO'd well, they haven't done quite well post IPO. And we would definitely want to mitigate any such situations. We would love to have a well-performing stock. So we will take our time, be more solidified, and hopefully do that 2 years out.
Fair points. In fact, I remember when IRD came with IPO guidelines, they also had made it very clear that the companies who were profitable, only those companies should hit the stock market then. And they kept revising those guidelines, but I think those are valid points. So fair points here, Varun. Let me take one more question here. When the insurance industry or the insurance got license, or when private insurance companies were allowed to open their branches, open their shops in India, most of the banks floated the insurance companies. And the big advantage which the insurance companies, large insurance companies even today have, is they have partnerships with the banks, right? Large banks, and they easily got the network. While the digital insurance companies have its own segments to cater, somehow the whole branch network, the ready-made customers is missing. Do you see that might be a challenge going ahead, considering that physical is still, what you can say, quite interesting in India? People still believe in the, person-to-person communication, and that may, hold back a few digital insurance companies going ahead compared to the traditional insurance companies.
So I believe how the last 20 years played out since the industry was privatized back in 2000, 2001, if I'm not mistaken. And right now we're sitting in 2022, roughly 20 years. The next 20 years will look very, very different. I don't think what has happened in the last 20 years will necessarily repeat. The pace of change will be much, much faster. Second is, if you look at the bank distribution and bank floated insurance companies, they have done very, very well on the life insurance side, not necessarily so much on the general insurance side. Amongst the top 5-6 companies on the general insurance side, you have Bajaj, you have Tata, you have Reliance. None of them are bank bank floated or had any captive bank distribution. Of course, they are bank partnerships, but they were not floated by ICICI, HDFC, or any of these. And on the general insurance side, therefore, banks have had a much smaller role to play. However, on the life insurance side, they have had a much, much larger role to play. So even within the next, I think even though banks have a large role to play, I do believe that they have a large role to play on the life insurance side, not on the health and auto and general insurance side. But even within life insurance side, if you look at what the banks do, they are largely selling investment products. And you will see over the last 3, 4, 5 years, protection products, which is term insurance, really having the highest growth rate. And the investment products are really tapering off. That's where digital will again pick up. And because term products are simple, if unfortunately somebody passes away, this is the money you get. That's all that there is to explain in the product. So the market will change, customer preferences will change. And to be honest, one of the other ways we look at this is that we have a huge partnership with Amazon. Amazon is the bank assurance simply means having access to customers. I think today customers visit Amazon far more often than they visit their bank. So from that perspective, I think the way the ecosystem will shape up in the next 20 years with changing product preferences and changing destinations, where I was largely going to the branch. Now I'm on the app of the bank, and more than the app of the bank, I'm on PhonePe or Amazon Pay or on the e-commerce website. So the partners are also changing. So I think the rules will change in the next 20 years.
Okay, meaningful one, Varun. Any other thoughts in terms of the whole financial industry? Because the banks are coming with partnering and collaborating with fintechs, insurance companies are collaborating with insurtechs, new age companies are coming, startups are also raising lots of funds. So how do you see the whole startup or the innovative ecosystem, I will call it, is building the future of India? What is your view on that?
I think it's a very exciting time to be in fintech or insurance in India at this point. One, where overall financial services is very underpenetrated. For example, even in the asset management side in the US, if you look at the AUMs of asset management companies and the GDP, the ratio is 1:1. Like GDP is equal to assets under management almost. India, it's still about 15-20%. Lending is always big. Insurance, there's a huge amount of underpenetration. So I think it's a very exciting time because the market's huge and a lot of underpenetration. And the good part now is that people are realizing the potential and there's a lot of capital available. We've been lucky. We've got good shareholders, good investors, and they continue to provide us with capital to scale, to grow, to experiment. And likewise, many other companies in the fintech space are getting access to capital. So you have a very high potential market with underpenetration, lots of capital, ambitious entrepreneurs. So we'll see a lot of innovation. I think we are also starting to see a lot more role that the government and the regulators playing in allowing innovation. With all the sandboxes that are coming, the talks of a digital bank happening at Niti Aayog, the insurance regulator is also has set up a sandbox. So I think if you combine all these three, openness of the regulator and the government for innovation, capital access, and underpenetrated market, I think it's a very, very exciting time.
Yes, noted your points, Varun, and meaningful, I think, thoughts here. Thank you so much for taking part in this interview and sharing your thoughts, Varun. Thank you so much.
Thank you. Thank you. Thank you so much.